Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Thursday, September 24th. Firstly to the S&P 500, and here we see a continuation of the trend to the downside for today's trading. Previous day's trading we had an inside day in bar chart terms. It raised some doubt about whether the trend was going to continue to the downside. We didn't see any change of trend on an indecisive candle as well. And we saw the sellers come into the market quite strongly after the open and trade down through important support at 1925 and down through the yellow highlighted zone down around 1950 and below, 1915 and below. The market did test down through that levels, but we saw very strong upside price rejection above both of those support levels, with the market failing to close down below those levels. The sellers losing commitment in a major way, and it suggests that there is a very real possibility of a change of trend here. Now the buyers have taken control on this candle as well, and we have formation of a very small body at the end of this trend, so a strong loss of momentum to the downside in net terms between the open and the close. The loss of commitment by the sellers and the loss of control by the sellers to the buyers suggests a very real possibility of a change of trend to the upside for the next day's trading. The thing is, we will need to see that confirmed with a candle that makes a higher high and higher low, and if we don't see that confirmation, if we see strong early bearish activity down below this zone below 1915, we could easily see the market trading down to about the 1900 round number, which should be probably an even stronger level of support, with it being a round number. This is also a potential bullish hammer type pattern, not quite perfect with the small shadow on the top, but still the consequences may be the same, only a slight difference between the perfect type of pattern. So looking for confirmation of that with a potential higher high and higher low. To the bands here with the S&P 500, and here we see the bands still squeezing together, coming together quite tight, looking for a breakout, and we have had a breakout today with the market just closing down below the lower band, but not in a bearish manner. What we want to see on these breakouts is solid bearishness if we're trading to the downside, and then strong follow through to confirm, or bullishness to the upside with the strong follow through. So we're not seeing that yet, so we can probably disregard this. The bands are pointing sideways, reflecting a lack of clear direction here in this market at the moment, but there is a possibility that if we do see strong selling and a strong close down below that lower band, and if we see the strong follow through and a breakout down below possibly the swing low here around the 1900 round number level, then we could see a resumption of a trend as dynamic as this was to the downside. It would also depend on the market breaking out down below this swing low where we reached the last time at 1866. Moving next to the Dow 30 in a similar type of candle here, a very small body, a larger shadow on the bottom. The dynamics here are very much the same as what we saw with the S&P, with the loss of net momentum by the sellers, although the amount was pretty much similar to the previous day and is slightly smaller. We've seen the sellers lose control of the market throughout the trading day, the buyers take control, and the sellers lose commitment as evidenced by the shadow. The market finding support at the 16015 level, which is an area that has held up quite well in the past, and we saw some strong price appreciation the last time that the market tested down there, trading all the way back up to 16805. So there is a possibility of a change of trend to the upside just off this price rejection from this level. But importantly, this is another hammer pattern, and we're looking for confirmation. Problem here is going to be the resistance at 16312 and then around the Kijun Sen and the Tenkan Sen, which at the moment are trading roughly about 16440, and they may move a little bit lower for the next day's trading, but certainly they'll be within this region just above the 16312 level and may offer very strong resistance. As mentioned yesterday, as we move further into next week, the Ichimoku cloud moves down quite rapidly, down to a level that will assist the market in finding some equilibrium a lot easier, rather than having to appreciate all the way back up to this 17,600 level. It may be a little bit easy for the market to break out early in the week or next week, but as we then move into the latter part of the month and the middle of the month, the cloud becomes a bit thicker, so the opportunity becomes a little bit less as we move further into the month. But the opportunity is still there, it's close by. The opportunity is also there for the market to hold as resistance and for selling to come off that resistance. So what we need to do is watch how the market reacts to the Ichimoku cloud if we do end up trading near there over the next month or so. And just looking at the Fibonacci retracement technique with the Dow 30, and here we see the market testing down below the 100% level of the previous first time frame uptrend and closing just below there, so suggesting with this strong loss of commitment down below there that there is a possibility of a change of trend, so enhancing the potential bullish pattern, the hammer type pattern. But we can't preempt the market. Proof will be with the market making a higher high and a higher low, so watching the high of this current candle at 16,257 very closely. And also with the Fibonacci extension technique, and here we're examining the relationship of the current first time frame downtrend to the immediate previous first time frame downtrend. And here we see the market testing around the 161.8% level. We have tested 2 there for the previous 2 candles. The buyers failing to come into the market, the sellers continuing, but the inability to close down below that region suggests a strong possibility of a change of trend, combined with the other technique and with the potential candlestick reversal. There's a good probability, but always requiring confirmation. If we see the sellers continue in the market, then we have the 261.8% level down below there at 15,748. Next to the Nasdaq 100, and here we see a change of trend back to the downside today, and that followed the market attempting to rally from the previous day's trading with a 1 candle uptrend. Today a 1 candle downtrend, forming a lower high and a lower low. The market, however, forming a white body candle, so a little bit different than we saw with the other indices. So momentum in net terms has shifted to the buyers, so a slightly more bullish candle here, whereas the previous indices had black body candles. So a shift in net momentum to the buyers, only small but still significant. Also the buyers have closed with control, as we saw with the other indices, and we have this longer shadow on the bottom here highlighting the loss of commitment by the sellers. The market unable to close down below the 4248 level of support, and we have tested around there for the past 3 candles and been rejected from there. Problem for the potential change of trend here to the upside may be strong resistance overhead. We have 3 levels just above where the market's trading at 4280, 4292 and 4308, and within those levels we have the window that was opened up, that was tested for the day's trading prior to today, and we saw a rejection from there. And that window extends to about the 4,300 level. But if the buyers are strong enough, the opportunity is here for them. So what we want to see is strong bullish activity. But even if they do breach up through the 4308 level, we have potential resistance at the Tenkan Sen, trading around 4323. Now, just looking at the Fibonacci extension technique here with the Nasdaq 100 and examining the relationship of the current first time frame downtrend that the market's in to the immediate previous downtrend, first time frame downtrend, and here we see the market testing down through the 23.6% level, importantly through the 38.2% level, being rejected from there with a loss of commitment by the sellers. The buyers taking control, shifting momentum to the upside, suggesting a very real possibility of a first time frame change of trend, so looking for confirmation of that with the market to make a higher high and a higher low. And just looking at the bands here with the Nasdaq 100, and here we see the bands squeezing even tighter together than we saw for the S&P, and this suggests that we do have to be ready for a trending move. Don't know when it'll occur, will be guided by price action, but importantly here the market trading within the band, so a fairly neutral market, and the bottom band holding as support. We'll be looking for either a strong bearish breakout and strong follow through, or a strong bullish breakout and strong follow through to confirm a move and a strong move in either direction. Just moving to our asset class ETFs, and TLT is the Barclays 20 plus year Treasury Bond Fund, and here we see some buying in this market today. The market breaking out up above the Ichimoku cloud, but on a negative candle where the sellers have closed with control. The buyers finding resistance at the Kijun-sen indicator. Potential for support to come in at the top of the Ichimoku cloud at 122.27, but looking at relative strength comparative against the S&P 500 in terms of the SPY ETF, comparing the two ETFs here, trading outside of the upper band. So for today's price activity, outperforming the equities market. Momentum of that relative strength is now just very close to that upper band and slightly above, and up above the 100% level, so suggesting we could see the start of some reallocation into bonds on a short-term basis away from equities. But with the sellers coming into this market today and a lack of follow-through after the breakout above the Ichimoku cloud, still a lack of confirmation here. What I'd like to see would be the market certainly trading up above the Kijun-sen in a strong bullish manner, and a continuation of the relative strength up above the upper band. But moving to gold, GLD is the code here, and perhaps some reallocation to gold here with a strong bullish breakout up above the Ichimoku cloud. What we want to see here is some strong follow through. Very often when we have breakouts above a flat cloud, we can have false breakouts, so just watching that carefully. Confirmation would be a strong bullish candle. Even then we could see the market retrace, and the test then would be the top of the band holding a support, and then the market moving away from there with strong bullish activity again. In terms of relative strength, strongly outperforming their overall market. Momentum here of relative strength is moving up above the 100% level, but still within the bands, and that confirmation with some more bullishness would see that momentum potentially move up outside of the upper band. We could see an outperformance of gold against equities continue, but at the moment still not convinced. Looking at the sectors here, and interestingly, the leading sector for today was the utility sector, which is generally the safe haven sector. So the question is, are we seeing a flight to safety here? Capital flowing into the utility sector as evidenced by the large white body candle. Still trading down below both the Ichimoku cloud and the Kijun-sen, so a bearish market in the longer term time frames and the medium term time frame, but looking at relative strength, just starting to poke outside of that upper band and suggesting that we may see some outperformance here. Momentum of relative strength is now up above the upper band, so this relative strength trend has some solid upside momentum, and suggesting that we could see some continued upside, but a lot would depend on whether the Tenkan-sen, trading at 42.43, acts as resistance. This good solid build of net momentum with a strong white body candle suggests we could see a breakout up above that upper band, and I suggest that if we do see selling overall in equities tomorrow, we could see the flow of funds in this sector continue. Just quickly to a few stocks here, and one that we've been watching for a while is Activision Atvi, which is trending up very strongly above each of the Ichimoku indicators, looking a little overextended in the depth away from the cloud and the Kijun-sen indicator. Formation of a spinning top type candle here today suggests that some indecision has entered the market, but we haven't seen the market sell off strongly, and that followed some strong bullishness from the previous day's trading. If we do see the market come off, looking to strong support at the Tenkan-sen indicator, trading at $30.34. Relative strength comparative is still up above the upper band, so still very strong, but momentum of relative strength has moved back to within the bands, so suggesting that the underlying strength in the relative strength is perhaps no longer there, and we could see it start to come off. And obviously that would be confirmed if we do see a lower high and a lower low in the market trading down towards the Tenkan-sen support. Facebook is a stock that we've been watching very closely, and one that ended up trading within the Ichimoku cloud for the last couple of days. Today, a strong white body candle with the buyers closing with control, but failing to close outside of the top of the cloud. So some resistance holding here, and there's potential for the market to come off once again. If we see a bullish breakout up above the cloud and then strong bullish follow through, we could see Facebook trading higher, but relative strength comparative still continues up above the upper band, but momentum of that relative strength is within the band, so the momentum in that relative strength is not strong, and suggesting that we may see the resistance at the top of the cloud hold. And to Nike, which was a stock that we'd been following for a while after the bullish breakout and the top of the cloud holding as support, and we've seen that happen today. The market, following some strong selling for the previous day's trading, has changed trend in the first term time frame, but on a candle where we see a small body form, the buyers are closing with control, a loss of commitment as the market tested within the cloud, failing to close within the cloud, and the cloud holding a strong support. Relative strength comparative here is up above the upper band, but momentum of relative strength is coming off, so it's suggesting that that relative strength certainly is not as strong now as it was previously. Importantly, however, we had Nike releasing some earnings figures in the after hours session, and we've seen a better than expected result, with Nike moving higher by 8% in the after hours trade, and trading roughly up to about the 124 level. So certainly the strong buying has come in off this support, and with the market continuing to be bullish in all three time frames, and this relative strength still continuing up above the upper band, it suggests that we are going to see this market move significantly higher when price action opens tomorrow.